Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 3:30 in New York. It is Wednesday, the 13th day of January, 2015, and this is the Daily Report for Gold and Silver. We have a nice upside bounce in the precious metals this morning. Gold trading up over 0.5% higher on the day. Of course, news on the street is the anticipation that the Fed will not raise rates as quickly as first anticipated is kind of what is fueling this short rally here. We'll talk about the technical aspects if we're looking at any kind of reversal and what we can look for in the days ahead. Currently, we have gold up $7.30 at $10.93 and change. The low, $10.79.96. I think that's really the critical number we want to look at because that's a level that we're looking at in terms of support. The high, $10.95 and change. So we're just about $2 off the high on the day. Silver also trading higher today, but up pretty sizable surge when you consider that it's up over 2.5%, 2.77%, over $14 again, up 38 cents at $14.15 with a low of $13.76 and a high of $14.19. So traders, the first chart that we're looking at today, a very, very short-term chart, this being 60 minutes in terms of length itself. And when we look at this chart, we can see a couple of things. First of all, I've got two moving averages, 200 cycle, 50 cycle. These are cycles off of an hourly chart, of course. The effective news is that we have absolutely traded above those. These are Japanese average charts. And the reason that I'm looking at these Henkin Ashi charts on such a short-term parameter, 60 minutes, is what I'm trying to ascertain is whether or not the upside spike that we're seeing is increasing in strength or diminishing in strength. And as you can see, we do have a lower wick on this candle. That's not that significant because we lose them on the next two candles. And all that means is that during this time period, it never traded at or below the midpoint of the prior candle. But we do have a diminishing in size in terms of candle size. You get the strongest candles right after the beginning of this rally itself as this market moved up off of the intraday lows at about 1080. So that tells me that although we're still in play, it is not as strong as it started out to be, and that is significant. The next chart we want to look at is a simple daily chart. This, of course, is standard candlestick format, and the interesting thing is we talked about this the other day, and we did not take a stab at it. My rationale was that we could find support at 1080, and I draw your attention to the box that I just circled, which shows that after a defined uptrend, we had a long green candle. We had a variation of a star. It's a small bodied candle, but nonetheless, it's a little bit bigger than you like to see a star. But then you get the red candle. That gives you, within those three candles themselves, a three-river evening star. But you have to really wait for confirmation on that. And we did get confirmation. We, in fact, got that yesterday. But one of the reasons that I did not take this call was the fact that when I looked at our level of support that has been just so effective, not only as support in this area, but prior resistance, to me, it's a pretty powerful place, 23% retracement level, and that's this market 1080. My sense was that we could easily come down another day, meaning today, hit these lows at around 1080 and then bounce back up off of those. And so my sense is that's exactly what we're seeing. Now, the real question is, just as we got this market stair-stepping down, and we talked about this on a couple of occasions where it would trade to a certain level, find a level of support, for example, a step, and then from there, take a step down. Here, it took a step down to here, but then took a step up, so to speak. You can see we then had this particular area, again, 1080 being very important, but it finds support really at this particular level, which is 1100, which is the next step up. So you get a step down, you get a step up right here. Of course, it comes in, this is the 1191 that we saw, and then it breaks through all of these levels, meaning it breaks through this level right here at 1080, it breaks through this level at 1100, and then it also breaks through this level at 1080 here. And so now we've got this new level of what was, once it broke through here, was real resistance. We attempted to break that resistance on a couple of occasions right in here, and we tested it here, but to no avail. So we had some really strong resistance at 1080 up until about a week ago when we saw this market blast through this area and then come up and make this intraday high at about, I think it was 1113 was the price point on that. So the fact that we then came back down, this is now a level of support as we talked about over the last couple of days. And the real question is, does it have the ability to break back above 1100? Will we see us enter another rally mode or bullish stage? And that, of course, is still to be determined. So traders, what can we make of today's move? One, there's certainly real support at 1080 in gold. There's no doubt about that. But there still is real resistance in gold at 1100 and then again at about 1110. You can see that on this Japanese average chart. It's a daily chart, but you can see because it's an average chart, it is still showing red, although the candle size has gotten much smaller. And you do have very, very small tails on the upper portion of the body within that. Also, we do have straight buying going on in the market, although the dollar weakness is slightly supportive. When you look at the $7.50 gain, about $6.85 of that is due to normal trading, and only about 65 cents actually due to a weakening U.S. dollar. We absolutely still have resistance at 1100. We have support at 1080. That's a pretty tight range, and we really want to see it break one way or the other before we can, on a technical basis with some certainty, ascertain our next real move in the market. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.